Yeah, let's start with the topic of profits and gains of a business or profession. This is the lengthiest chapter, and I try to make it as short as possible by skipping all the irrelevant concepts. Okay, and here we are going to study all these 12 topics, and there are subsections when we go through that. So let's start with the topic of income computation and disclosure standards. Actually, this is first topic in ICA material, but many of the faculty will tell it at the end. I thought of skip. People will be skipping because this is a vast chapter. No, at the end will not be having any interest to listen to this. So I'm keeping in the first topic only. So income computation and disclosure standards. The name itself tells that it is used to compute the income for the payment of taxes and disclosure for the notes to accounts. So it is for maintenance of, it is not for maintenance of books of accounts, it is for computation of income, and it is applicable to all the income, all the assessees, but for individual and HF it is applicable only if they are eligible for audit. Means if they are not eligible for audit, they need not follow the standards, and it is applicable only if they follow mercantile system of accounting. So if they follow cash system, they need not follow this one. So if there is a conflict between, see what is a conflict, if income tax act is telling one thing and ICDS is telling one thing, what we should follow? Income tax act only we have to follow. Income tax rules tell, if the conflict between rules and ICDS, then follow the rules. But if there is a conflict between AS or IND AS and ICDS, we should follow ICDS. Okay, ICDS will not apply for MAT computation, but applies for AMT computation. Okay, remember this point. So when we come into the ICDS, there are 10 we will be discussing in this chapter. So first one is accounting policies. So what does it tell? We should follow going concern, consistency and accrual concept, but we should not follow prudence. What is meant by prudence? We will be expecting some loss and we will recognize it now itself, but what does this standard tells? We should not recognize the expected loss, but only actual loss should be recognized, and we should not follow the materiality concept. What we should do? Substance we should follow, not the materiality. And the next ICDS is second one, valuation of inventories. So we should follow cost or NRV, whichever is lower. But if in case of dissolution, means that there is no going concern concept, then we will be following NRV only. We will calculate inventory based on NRV. Construction contract, for construction contract we recognize revenue and cost of contract under percentage of completion method. See what is meant by percentage of completion method? If they are, sorry, if we are constructing a road of 100 kilometers and we have constructed 10 kilometers, means 10% of the total work completed. Okay, we have estimated 1 crore for this, and what is our income? 1.5 crores. How we should recognize? 1.5 crores of into 10% will be our revenue, 1 crore into 10% will be our cost. So like this we have to calculate in percentage of completion method. In construction contract, we should follow percentage of completion method as per ICDS 3. So how do we need to recognize the income? In case we have sale of goods, we need to recognize revenue for sale of goods. Then recognize only when there is completely risk and rewards will be transferred to the other party, and we are sure that our money will be collected from them. Okay, significant risk rewards of ownership are transferred, and there is a reasonable certainty of its ultimate collection. We have confidence that we will collect that income. Then only we should recognize the revenue in case of sale of goods. What if it is a service transaction? We have different methods: percentage of completion method, straight line method, project completion method. If see, project completion method only if 90 days, if it is duration is less than 90 days. What is meant by project completion? Oh, we should recognize only after the completion of entire project. Okay, entire revenue and cost should be recognized after completion of entire project. We should not recognize in the middle after completion of certain amount. So what is meant by percentage of completion method? We have discussed here only. What is meant by straight line method? We should see, if it is for 5 years, we should 1 crore of income should be recognized for 5 years in straight line method. Same way, means 20 lakhs per annum. Okay, like this. In case of service transaction, all this for. In case of interest, we should recognize on accrual basis, but it is an interest on refund. On receipt basis, we need to recognize. The fifth standard is tangible fixed asset. How should we recognize that one? At actual cost. Normally at actual cost. If we acquired it for exchange of shares, securities, or any other asset, then also we should recognize it actual cost only. And depreciation, and in case of sale, there is a capital gain arises. So in that case, we should follow what income tax says. And in revaluation is not allowed as per ICDS. The sixth one is effect of change in foreign exchange rate. See, there is a due to foreign exchange rate fluctuations, there will be income or loss, gain or loss will be arising to the organization. What we should do that one? In case it is a monetary loss, then recognize as income or expense. If it is not monetary item, then we should not recognize that in the for income computation. Seventh one is government grant. If we have received government grants for depreciable fixed asset, then reduce it from actual cost or WDV. If it is a non-depreciable item, then recognize it over the period of conditions to be fulfilled. See, we have user, the condition is that we need to purchase one asset and we should not transfer that for 10 years. Then recognize that income for 10 years. If we have received 1 crore, 1 crore by 10 years, 10 lakhs per annum, we should recognize. Received as a compensation for expenses or losses. See, we have incurred some losses and we have received government grant in order to set off that losses. Then what we should recognize in the period in which it is received. So there is no condition to be fulfilled, no. So now itself we have received and account the total income now itself. Pay tax on that. In case of any other grant, recognize the income over the period matching the cost. For relevant cost, we should recognize the relevant expense. So in case of securities, we have two types of securities. We will be holding securities as stock in trade, like we will be doing trading with that, or else securities held by bank or public financial institution. They should follow RBI rules. But what we should follow, cost or NR, whichever is lower, same as stock in trade. But we should consider category wise. We should consider cost for or NR whichever is lower for entire preference shares as one, and entire equity shares, debentures, we should categorize as a single element, not the individual securities. What we should do for borrowing cost? We should capitalize the borrowing cost if directly attributable to qualifying asset. What is qualifying asset? An asset which takes more than or equal to 12 months for its construction acquisition. So if we incur any borrowing cost for that, we need to capitalize that expense to the asset only. How we should recognize provisions? We should recognize only if there is certainty that outflow will arise and reliable estimate of that can be made. We should able to measure the loss we are going to suffer in future. Then only we need to recognize. Contingent liabilities we should not recognize. Contingent asset we should recognize. When there is certainty or that inflow will arise, we are sure that we will get that income. So all these are 10 standards. Haven't given unnecessary part to you. I only gave which is necessary to remember that one, how we should account that particular asset, how we should tax income for that, how we should compute income for that. I have given that only. Okay, so that you will be able to remember. If I give unnecessary stuff, there will be a chance of skipping that one. Okay. So when coming to the charging section, here also I haven't included everything. I have included only which is important and which is different. Okay, it is very we will forget sometimes under which in head we need to charge that income. That topics only I have included here. But first mandatorily we will income all we will tax here income from profits gains from business or profession. This is heading itself. uh, and next one is payment received in connection with termination or modification of any terms and conditions. Okay, there is a modification in any terms and conditions and we have received the payment for that one, we need to tax it in PGBP. Income received from members for providing specific services and incentives received from the person for export businesses. So import entitlements. So we have license and we have sold to that to some other person. So then we will be receiving some amount that should be taxed in PGBP. Cash assistance from Government of India, duty drawback and transfer of duty entitlement passbook scheme or duty free replenishment certificate. Any sale of that for export businesses will be taxed in PGBP. Value of any benefit or perquisite from business or profession. Uh, any amount received by partner from partnership firm will be taxed here only. Amount received for not carrying any activity relating to business or profession, not sharing intangible asset like non-competing fee will be taxable in PGBP. Amount received under key man insurance policy. See, what is key man insurance policy? Key man in the sense main important person in the business who by whom business is running today. If they are not there in the business, we will definitely incur some loss. In order to compensate some that loss, we will take insurance from that on that person and we will be paying premium for them only. Like business will pay for them and amount received will be for business only because business only will suffer loss if keyman is not there, no. So he will receive that amount and it is taxable under PGBP. FMV of inventory on its conversion as capital asset. So we have this capital asset to inventory. In detail, we will learn in capital gains chapter also. Inventory to capital asset. We will tax in here only. Inventory will to capital asset, we will taxable it here. Capital asset to inventory, we will tax in capital gains. But entire concept we will learn in capital gains. Amount received from transfer of capital asset which was initially taken as deduction under 35 AD for carrying specific businesses. We will learn this in later stage. For doing some specific business, we can claim 100% deduction for fixed asset. But if we sell that asset in the middle, we need to pay tax on them and it is taxable under PGBP. Speculative income. See, purchase and sale. What does speculative income mean? If purchase and sale is settled one. See, if we If for purchase 10,000 we incurred and for sale we got 20,000, only 10,000 will be the transaction amount. Then it will be called as speculative transaction. But here speculative transaction will not include the following, means we should not tax all these under PGBP. What are all those? Hedging contract. See, in case of because of due to fluctuations in foreign exchange, we will enter one contract now only that we will sell, we will settle this transaction at particular price. So it is just to safeguard ourselves from losses. It is called as hedging contract. It will not come under speculative transaction. And forward contract, it is to buy or sell particular product at particular date at particular rate. Okay, we will prefix everything now itself. Trading in derivatives or commodity derivatives. See, based on some underlying asset, we will enter into one contract. So in that one also will not come under speculative transaction. Losses in speculative business cannot be set off against profit of any business other than speculative business. Means speculative business losses can be set off against the profit of speculative business only. In case of any other business, we cannot set off. So there we have done with the first section, charging section. And the next topic is admissible deductions. See here, there are first two sections in which rates, taxes, rent, depreciation, all that they have given. But the moral of everything is, conclusion is, revenue expenses we should allow, means we can debit to P&L account and we can take the deduction. Capital expenses we should not allow that expense, we should add to the cost of asset. Only this is the moral. So conclusion. So depreciation is another expense, but see, we are discussing here all the expenses, admissible deductions in the sense expenses what we are going to have in profit and loss account, what we can deduct. But revenue expenses we can deduct, capital expenses we cannot deduct. Depreciation we can deduct, but we need to follow some rules in order to take the depreciation. It is mandatory to charge depreciation. It is not an option for assessee, and we should calculate depreciation as per Income Tax Act on assets for active use, passive use. Passive use means we will maintain some asset just to uh, replace it whenever there is an emergency. We will not use on regular basis. In that case also, we see, even if we are not using that passive asset, we can take depreciation on them. We have to take depreciation on them because it is ready to use. From the date of put to use is mandatory. But for standby machinery, that spare machinery will be there, no, for emergency machinery, that one ready to, if it is ready to use, we can take depreciation on them. In case of lessee will take, lessor will take the depreciation. Who is the lessor? The person who give asset on lease, means the owner of asset will take the depreciation. In case of hire purchase, assessee can claim the depreciation. There will not be any depreciation for land and goodwill. This is mandatory to remember this one. Only 50% depreciation is available if we use that asset for less than 180 days in the year. See, we should calculate that 180 days from the last, means from 31st March. Because if you have put to use the asset from 4th October, means after 3rd October, means from 4th October, any date if you keep that, you can take only 50% deduction. If it is on or before 3rd October, 100% deduction. So I have given this date because instead of calculating every time how many days they have used, if you remember this date, 3rd October, you can easily calculate 50% or 100% of depreciation. The other thing is, see, if you have purchased an asset on 1/11/21 and you haven't put to use this year. If you put to use this year, this is after 3rd October, no, you can take 50% deduction for what is the assessment year for this 22 23, but you have put to use in next year, means 1/11/22. Then for assessment year 23/24, you need to take 100% deduction, not 50%, because they have given that rule. If asset put to use for less than 180 days in the next year, take 100% deduction. Okay, here this year they have purchased, this year they have put to use for less than 180 days, then also we need to take 100% deduction for depreciation. And in case of succession, first we should calculate depreciation normally, then after we should divide that in the ratio of number of days used by each one. Succession in the sense, partnership firm is converted into LLP, or partnership firm converted into company, all that will be there, no. So someone demerged, someone got amalgamated, any of that we have to calculate normally in the first time. Then after we have to divide in the ratio of number of days used by each organization. It is necessary to remember the rates of depreciation. Sometimes they will give only the asset name, we have to calculate depreciation. So for intangible asset, means for patents, copyrights, everything, we have to calculate 25%. For buildings, if we use it for residential purpose, means for employees we have given to stay, that one we have to take 5% of depreciation. In case of commercial purposes, 100%, like offices, we are using it for office, 10% depreciation. Normally we have to take this depreciation normal, this is a 10% is the normal rate, general rate. If they did not mention anything, they have only given building, means we have to take 10% only. And in case of any temporary structure, there is only 40%. See, maximum rate of depreciation is 40%. There is one exceptional case, other than that it is 40% maximum. For furniture and fixtures, it is 10%. For plant and machinery, general rate, means they have not mentioned what type of plant it is. We have to take 15% of depreciation. Specifically, I have given some examples here. If they mention this one, we should take a 15%. Oil wells, EPA, BX, mobile phones, office equipment, forklift truck. Okay, all forklift truck means vehicles used it within the factory to move goods here and there. Okay, we should not consider it as motor vehicle, we should take it as plant and machinery, and we should take the depreciation of 15%. See, these two also we should not combine in computer and accessories. We have to take this as a plant and machinery and tax it at 15%. Okay, next, ships. Only ships are charged at 20%. And molds, plant and machinery used in semiconductor industry will be depreciated at 30%. And we will now come to the 40% rate. Computer and accessories, books, we know it from the IPCC, but here see, all these are big assets, means a large one. Windmills, life-saving equipments, pollution control equipments, aeroplanes, and water supply project machines. All these are taxed at 40%. Books, computer and its accessories, see, all these should be taxed at 40%. Motor vehicles I have given separately. There is a huge content regarding the motor vehicles, but the only conclusion is, if motor vehicles used on hire, see, if used for a hire, then we will be using it a lot, so we should take 30% depreciation. If not for hire, just we are using for office purposes, then only 15% depreciation. Okay, up to here you need to remember, this is an exceptional case. Only if it is between these dates, then just add 50% to your normal rate. For 30% it is 45%. If it is used for hire purchase, If not for hire purchase, then 30%, 15 plus 15. Just add 15% if it is between 23rd August 2019 to 31st March 2020. For only this exceptional asset, exceptional case, we have these rates. See, this is the highest rate. Exceptional case I told, no. Other than this, 40% is the maximum. So this is all about depreciation, and we will have additional depreciation. So what is additional depreciation? In case any assessee is engaged in manufacturing of any goods, generation of power, distribution, generation of electricity power, printing business also, then and purchase a new machinery. Okay, plant and machinery should be new, then they can take a additional depreciation, means they can book extra expense. So what is the rate of additional depreciation? 20%. But if they use it for less than 180 days in the year, then only 10%, means 50% of that, and remaining 10% we can claim, 10% we can claim next year. See, we do not have that option for normal depreciation, but for additional depreciation we have that option, 10% this year, 10% next year. And see, I told depreciation available for purchasing new plant and machinery, but that plant and machinery will new plant and machinery, but that plant and machinery will not include second hand plant and machinery. Any plant and machinery incurred in office premises or residence, any like AC, all that will be there, no? We cannot take on that. Office appliances, ships, aircraft, road transportation vehicles, all this equipment also we cannot take. And plant and machinery on which 100% deduction is already available, like for 35 AD for specific businesses, we have taken some asset and we have taken 100% deduction for that. We cannot take the depreciation or additional depreciation. See, forklift truck. See here, road transport vehicles are not eligible for additional depreciation. But see, forklift truck I have told, no, we will use for internal transportation within the factory. So it comes under plant and machinery, not the transportation vehicle. So it is eligible for additional depreciation. We can take on forklift truck. We have 4 illustrations, we will see that. Mr. X, a proprietor engaged in manufacturing business, furnishes the following particulars. Opening WDV of plant and machinery as on 1/4/21 is WDV on 31/3/21 after reducing depreciation for previous year 2021. See, on 1/4/21 WDV is 30 lakhs. New plant and machinery purchased and put to use on 8/6/2021, means it is before 1st October 2021, means we can take 100% depreciation on them. So what is the new plant and machinery? 20 lakhs. New plant and machinery acquired and put to use on 15/12/21, means after 3rd October. See, this is eligible for 100% and this is eligible for 50%. Both are new only. Computer acquired and installed in office premises on 21/1/22, 3 lakhs. This is also eligible for 50%. See, what you have to observe here. We should calculate normal rate of depreciation, compute the amount of depreciation, additional depreciation as per Income Tax Act. Assume all the assets are purchased by the way of pay check. Means eligible mode of payment. See, normal depreciation. First, we should remember the rates. No, first it is plant and machinery. If they did not give anything, normal rate is 15%. For 100% new plant and machinery, 20 lakhs. This is also 15%. This is all plant and machinery 15%. Computer is for 40%. Okay, first we will calculate normal depreciation based on these percentages. For 30 lakhs, 15% means 4.5 lakh. For 20 lakh, we should take only 15% because it is 100%, no? 3 lakhs. So 8 lakhs into 15% into 50%, 60,000, and computer 3 lakhs into 40% into 50%, 60,000. Additional depreciation. See, it is only for new plant and machinery, and it does not include computer and its appliances. No, for office premises, all that we should not take that one. Office for it is purchase for office premises. See here, plant and machinery will not include. Plant and machinery do not include office appliances, office premises. So we should not calculate depreciation on that. We should calculate only on plant and machinery purchased newly. So for 20 lakhs, it is used for whole of the year, more than 180 days, means 20%, 4 lakhs. And for 8 lakhs, only 10% because we have used it for less than 180 days. What is the total amount? $8.7 lakhs, 4.8 lakhs, 13.5 lakhs. Checked with the answer. We have to compare 7.5 lakh on 50,000. See, 15% on 50 lakhs means, see here, 30 lakhs plus 20 lakhs will be 50 lakhs, no? On this 15%, 7.5 lakhs. This both combined, we will get 7.5 lakhs. Okay, correct only. 60,000 on 20% of 3 lakhs. This is for computer. So computer 60,000. We got this. And next 4 lakh. See, additional depreciation they are calculated. See this one. For see this one also 60,000 means 7.5% of 8 lakhs. So this is also correct only, 7.5% of 8 lakhs. And coming to additional depreciation, 20% of 20 lakhs means for new plant and machinery, use it for more than 180 days. It is 4 lakhs. See here, 4 lakhs. And 10% of means for 8 lakhs 10% means 80,000 here. 80,000. They given different formats, so have seen individually. So we can, all this is correct answer only. For format you can follow the ICI material. Second question. A newly qualified chartered accountant, Mr. Dawal, commenced practice and has acquired the following assets in his office during the financial year 21-22 at the cost of shown against each them. So they have given some cost. At this cost they have purchased these assets. Calculate the amount of depreciation that can be claimed from his professional income for assessment year 20 to 23. Assume that all assets are purchased by way of account payee check. So, in the year of purchase, we have to calculate the depreciation. We have normal depreciation and we will be having additional depreciation. Computer, including computer software. See, computer and its accessories will be taxed at 40%. So, if it is used for more than 180 days, see, put to use is on 1st October, means before 3rd October itself. So, it is 100% we have to calculate. Sorry, means 35,000 into 40%, 14,000. Additional depreciation we will not calculate because it is for office premises. Actually, we should not calculate here additional depreciation only, because he told everything is for office purpose. Here in his office he told, no, for office premises we need not calculate additional depreciation. This is not correct. UPS, computer UPS means computer and its accessories, 40%. See, put to use, this one we have to see after 3rd October. So, it is for 50% only we can take, means 20%. 8,500 into 20%, 1,700. Computer printer, see, it's computer accessory and put to use before 1st October means 40%, 12,500 into 40%, for 5,000. Books, see, books, any kind of books should be taxed at 40, see, depreciated at 40%, and we have put to use book on 1st April 21, means whole of the year we have taken that one, 13,000 into 40%, 5,200. Laptop, see, no, this is 5,200. Office furniture acquired from practicing CA. See, office furniture should be taxed at 10%. For furniture it is 10%, no, and it is put to use on 1st April 21, means you use it for more than 180 days. 3 lakh into 10% will be 30,000. Office laptop comes under the computer and should be taxed at 40%, but it is put to use on 8th October, so use it for less than 180 days and we should tax it for we should depreciate it for 20% only, 50% rate of depreciation. 43,000 into 20%, 8,600. Okay, total 14,000 plus 1,700 plus 5,000 plus 5,200 plus 30,000 plus 8,600, 64,500. We'll check with the answer. $64,500. See here. Okay. Now coming to the next question. Fourth one is also there, no? Okay. Two more questions were there relating to depreciation. Sai has block of assets carrying 15% rate of depreciation, whose WDV as on 31/3/21 after reducing depreciation was 40 lakhs. 1,421, 40 lakhs WDV is there at 15% depreciation. It purchased under asset second hand plant and machinery of the same block on 1/11/2021 for 14.4 lakhs and put to use on the same day. See, this is second hand machinery, so additional depreciation is not available for that, and it belongs to same block. They said same block means 15% rate of depreciation. So 14.4 lakhs into 15% depreciation, and use put to use on first 1/11/21 means after 3rd October, means at 50% we need to charge the depreciation. Sai Limited was amalgamated with Shirdi Limited with effect from 1/1/22. Okay, we need to bifurcate the depreciation among both. You are required to compute the depreciation allowable to Sai Limited and Shirdi Limited for the previous year 31/3/22, assuming that assets are transferred to Shirdi Limited at 60 lakhs. All Also assume that plant and machinery were purchased by the way of account pay check. See, we have to first, what I told, first calculate the total depreciation normally. Then after bifurcate it in the ratio of number of days. Okay. So 40 lakhs into 15%, 6 lakhs, 14.4 lakhs into 15% into 50%. That is 1.08 lakh. Total depreciation is 7.08 lakh. So what is the number of days? Sai and Shirdi, no? Okay. Total days 365 will be there. Among that, Sai, what is Shirdi used by first January 22 means January 31 days, 28 days of February and 31 days of March means 90 days. Minus 365 minus 90 will be 275 days. So we have to bifurcate in this ratio, right? Seven point divided by 365 into 275. 5.33 lakh and 7.08 minus 5.33 will be 1.75. Do you think this is correct answer? No. We should not calculate like this, because this is used for different number of days, this is used for different number of days. We have to calculate in that way. How? First, opening block is used for 365 days and we have used it for Sai Limited for 275 days, for Shirdi Limited 90 days. So 6 lakhs should be bifurcated in that way. 6 lakhs divided by 365 into 275. 4,52,055 minus 6 lakhs, 1,47,945. This is for Sai, this is for Shirdi. But this 1,08,000 is there, no? This is for new plant and machinery which was used from 1st November 21. Means how many days we used that one? November 30 days, December 31 days, plus the 90 days from January to March, 151 days. In that 151 days, 90 days is for Shirdi and the rest of that means 61 days is for Sai. We should bifurcate 1,08,000 in this ratio, 61 is to 90. So 1,08,000 divided by 151 into 61 comes to 43,629. Okay, and 1,08,000 divided by 151 into 90, 64,371. So calculate this total. Four lakh 52,055 plus 43,629. 4,95,684. 1,47,945 plus 64,371. 2,12,316. Now check with the answer. See, for Sai Limited, 4,95,684. 4,95,684. For Shirdi Limited, it is 2,12,316. 2 lakh, sorry, 20. I wrote wrong. Calculation is correct only. Totaling mistake is this is 2,12,316. Okay, we have arrived at the answer. Don't forget that we should bifurcate between the days, and it should be same as their days used. It should not be more than they have used. Next question. Lights and Power Limited engaged in the business of generating power furnished the following particulars pertaining to previous year 21-22. Compute the depreciation available under section 32 for assessment year 22-23 and opening balance of WDV as on 1/4/24 while computing the his total income under 1/4/22 under PGBP. See, they said to calculate the depreciation available and opening balance for 1/4/22 means closing balance for current year also we should find out. Company has opted for depreciation allowance on the basis of return on value. Assume that all the assets are purchased by way of account pay check, means eligible mode of payment. Opening WDV, we should calculate opening. See, what is the way to calculate the closing balance? Opening balance plus purchases minus sales. We should arrive at the total and minus depreciation. We will arrive at closing balance. Okay. We should fill all this now. Opening WDV as on 1/4/21, purchase value 8 lakhs, WDV for previous year 2021 is less depreciation for that year 5,78,000. This will be our opening balance. Purchase second hand machinery 15% on 29/12/21 for business purpose. See, they have purchased on 29/12/21 means only they have used it for less than 180 days means only 50% rate of depreciation 2 lakhs, but we have to include that in purchases. No, see, we will write here purchases 2 lakhs. Machinery Y purchased and installed on 12/7/21 for user purpose of power generation. More than 180 days. This is less than 180 days. For more than 180 days, 8 lakhs asset is used. Acquired and installed for the use of new air pollution control equipment 2.5 lakhs. Just a minute, I'll write in a different way. We will draw this table separately again. We will strike off this one. Now write first purchases. First one, see, opening WDV is not a purchase. Purchase of second hand. Are you able to see this? See, 2 lakhs we have purchased and we have used it for less than 50% of days. So we need to include this in purchases, but only 50% rate of depreciation. Full or half we will write here. And 8 lakhs we have purchased in current year, but 100% rate is available. See, both are eligible for depreciation and additional depreciation because both are plant and machinery. See, this is not eligible, so here we will give one hyphen. Because it is second hand machinery, we cannot calculate additional depreciation. And acquired and installed new air pollution equipment on 31/7/21. What is the rate to for that? 40% additional rate. This is 15%. This is 15%. Okay, and 31/7/21 means more than 180 days, 100% eligible depreciation. Both depreciation and additional depreciation we have to calculate on that. New air conditioning purchased and installed in office premises. AC is comes under 15% rate of depreciation. So 15%, 3 lakhs purchases, and 8/9/21 means 100% eligible for 100%. And it is not eligible for additional depreciation because it is for office premises. No, it is not available. New machinery Z acquired 15% they have given here, acquired and installed on 23/11/21 for purpose of power generation. 3,25,000 purchase rate, and see 23/11 means after 3rd October means only 50% rate, and for power generation, so we have to calculate additional depreciation also. Sale value of old plant and machinery, old machinery X sold during the year. Purchase value, sale value, we have to consider this only actual value for which it is sold. Okay, see now sum of all the purchases. 2 lakhs plus 8 lakhs plus 2,50,000 plus 3 lakhs plus 3,25,000. Total comes to 18,75,000. Next, calculate depreciation. Here we have written rates and percentage. No, we have to calculate 2 lakhs into 50% into 15%. 15,000. 8 lakhs into 15%. 1,20,000. 2,50,000 into 40%. 1 lakh. 3 lakhs into 15%. 45,000. 3,25,000 into 15% into 50%. 24,375. This is the normal depreciation. Additional depreciation will be 20%, 100%. So 8 lakhs into 20%. 1,60,000. 1 lakh into 20. Sorry, 2,50,000 into 20%. Three lakh 25,000 into 20 only 10% because it is used for less than 180 days. 32,500. Calculate total. 15,000 plus 1,20,000 plus 1 lakh plus 45,000. 24,375. 3,04,375. 1,60,000 plus 50,000 plus 32,500 2,42,500. Total 5,46,875. Now calculate depreciation on opening WDV minus sale value. Okay, see 5,78,000 minus 3,10,000. What will come? 5,78,000 minus 3,10,000. 2,68,000 into 15%. 40,200. We are adding this here. 5,87,075. Okay, we will fill that in table. I have shown more in now. Opening balance plus purchases. See, what is the opening balance? 5,78,000. What is the purchases? 18,78,000. 18,75,000. See this one. Total purchases. Minus sale. So sale value is 3,10,000. What we will arrive here? 5,78,000 plus 18,75,000 minus 3,10,000. 21,43,000 minus depreciation. Total depreciation is this one. 5,87,075. So if you reduce that, 15,55,925. Come, we will check with the ICI answer. Array. It's fourth question, no? This one. See how they have drawn here. Plant and machinery 15%, 40% they have calculated separately. So WDV as on 1/4/21. This also they have asked, no, this is, if this is a correct answer, then depreciation will also match. 14,55,925 plus 1 lakh means 15,55,925. Okay, this we have answered correctly. 15,55,925. Okay, we have done with 4 questions relating to depreciation. So now we will go to the next deduction. We have done with depreciation, lengthiest topic. Don't forget the rates. They are important. Sometimes they will not give rates in the examination. So the next deduction is regarding deduction for tea, coffee, rubber business for them. And similarly, we will have deduction for petroleum and natural gas business. First, let's see what deduction they will get. Deduction will be the amount deposited in NABARD. Okay, whatever we deposit here, and here site restoration account. See, deduction is available to all the individuals, not the companies, individual, HUF, everyone. Here also everyone. But what we should do, we should deposit some amount into NABARD up to which date? Up to the due date of return filing or 6 months from the end of the previous year, whichever is lower. If it is a case of petroleum and natural gas business, we can deposit up to the end of previous year. Okay, remember this separately. Okay. Then what will be the deduction amount? How much we will get deduction? See, whatever we deposited in that, we will get deduction? No. How much? Actual amount of deposited, or 40% of PGBP, whichever is lower. Only lowest of that will be the maximum up to 40% of PGBP. In case of petroleum and natural gas, actual amount deposited or 20% of PGBP. Okay. Don't forget, here we should deposit in NABARD, here we should deposit in site registration account, and here it is up to the due date of return filing or 6 months from the end of previous year. Here it is up to the end of previous year. And here the maximum amount is 40% of PGBP, here it is 20% of PGBP. Okay, there are other conditions. Let's check. That amount deposited should be used only for the purpose specified by respective board. If misutilized, then we have to pay tax on the entire amount. And if the amount is withdrawn for specified purpose, it should be used within a year of withdrawal. Otherwise, it will be taxable. Okay. And asset purchased with deposit amount should be held for 8 years. Okay, it is a lock-in period for them, because they have withdrawn some amount within 1 year. They purchased one asset, we said it is okay and gave the reduction, then they may sell it off next year only. So for that purpose they have kept this condition, they should use it for 8 years. And deposit amount cannot be used for the following purpose. For what purpose? For purchasing the plant and machinery that will be used in office and residence. For purchase of office appliances, not being the computer, they can purchase computer, but any other office appliances they cannot purchase. And they cannot tell that I have purchased one plant and machinery, but I got 100% reduction in some other section. They cannot invest on such assets for which they get 100% reduction in some other section. Okay, all these 3 assets. Don't forget to remember, because confuse also, because here we have additional depreciation. We cannot take additional depreciation on these 5 assets, and we cannot use the deposited amount for these 3 assets. Don't confuse in between all this. We will get many more like this. At the end, I'll give one list of assets, like which is not eligible for which section. Okay, we have done with the section. What they told, we can use only for specified assets the deposited amount. For tea, coffee, rubber business, maximum is 40% of PGBP. For natural gas, it is 20% of PGBP. Next section is 35, scientific research expenditure. See, we will get this deduction even if we spend for our own business, or we give it for other outsiders for doing some research. But we should give only to these persons, then only we will get deduction. Who are those? Who have approved research association, institute, college, university, and they are doing scientific and social statistical research. If they are involved in this and we have donated to them, we can take that 100% of the deduction amount. And if given to IIT National Laboratory and using for scientific research, then also we can take 100% deduction. If we have given to approved Indian company engaged in research and development, then we can give 100% reduction. Okay, this is for outsiders. Only these people can take, only if we donate to these people we can take that deduction. What if we use for ourselves? See, after commencement of business we use for ourselves, then we can take deduction. But we cannot use for land. See, if we have purchased land, then no deduction. In any other case, any other capital expenditure or revenue expenditure, we can take 100% deduction. when only after the commencement we have spent that amount. But before commencement, maximum up to 3 years, we have made some investment in land always no deduction. But for any other capital expenditure, 100% deduction is available. So for before commencement up to 3 years, if we incur any expense in material and salary, we can get 100% deduction. Any other revenue expenditure, no other deduction. Okay, remember this as it is, don't get confused. Okay, land anywhere no deduction, but the other thing which we don't get deduction is revenue expenditure except salary and material. Okay, see, if we have donated to some institute because they have some approval, and later on approval got withdrawn by the government, then also there is no problem for deduction, we can still take the deduction. And no deduction on the asset if a deduction under 35 claimed. No, actually here what? See, here it is not deduction, depreciation. We cannot claim depreciation if we have taken deduction under section 35. Means in this section only for scientific research we have purchased any asset and we have took 100% deduction on them. We cannot take further deduction for the depreciation on that asset. Okay. Any unabsorbed capital expenditure can be set off and carry forward, same as unabsorbed depreciation, unlimited for unlimited number of days, years. We can take that carry forward. Means we got, see, so for example, we got only 30 lakhs from that uh, research income. Okay, but we have invested 50 lakhs. 20 lakhs can be set off in next year, set off and carry forward. My up to, only for unlimited years we can carry forward like that if capital expenditure is not set off. We can get deduction only if two conditions is satisfied. This is the new condition. One is donee institution for whom we have donated. They have to prepare one statement and they should submit to respective authority. And donee shall furnish to donor a certificate containing the details. What is the amount and how much, what they have used it for, all that. Illustration 5. A Limited engaged in the business of manufacturing furnishes the following particulars for previous year 21-22. Compute the deduction allowable under section 35 for assessment year 22-23 while computing its income under head PGBP. Okay, for this we need to calculate the amount of deduction. Only 4 they have given. Amount paid to notified approved Indian Institute of Science, Bangalore for scientific research. See, Indian Institute. Indian Institute. We can take 100% deduction. Scientific research also we can take 100% deduction. So 100%. Total 1 lakh we will get deduction. Amount paid to IIT Delhi for applied scientific program. In the second row we have given this, no? We can take 100%, 2.5 lakhs. Amount paid to X Limited company registered in India which has main objective of scientific research and development as it's approved by prescribed authority. So in the third scenario we have given this example like any company registered in India who is investing in scientific research and development. 100% is available, 4 lakhs. Expenditure incurred on in-house means for self we have invested. Approved facility as approved by prescribed authority. Revenue expenditure on scientific research. See, after we have two in that. After commencement of business, before commencement of business. They have not mentioned anything here, so that we will take it as after commencement. For after commencement, everything revenue expenditure, capital expenditure is allowed. But if they invest for land, it is not allowed. So for revenue expenditure, 3 lakhs, 100% means 3 lakhs it is allowed. Capital expenditure including cost of acquisition of land, 5 lakhs. 7 means only 22.5 lakhs is allowed. Okay. What is the total amount? 2.5, 3. 1 lakh plus 2 lakh 50,000 plus 4 lakhs plus 3 lakhs plus 2 lakh 50,000. Total 13 lakhs is available. Let's compare here. Fifth question, this one only. No? Total 13 lakhs, okay? Correct only. Next, that scientific research we have done with. Coming to the next question, next direction, it is direction is available if we make an expense for obtaining telecommunication spectrum and license. Both are different sections, but content is same. Conditions are same for that. So, what is the direction available? Actual amount paid, but it is available only in equal installments. So, for how long? How from when to when? If payment is made before commencement of business, then from the commencement to expiry of license, we can have the direction from the commencement. So before commencement, if we made payment, only from commencement it is available. If the payment is made after commencement of business, from the payment to expiry. Simple. Okay, we have illustration 6 on that. X Limited, providing telecommunication services, acquired a telecom license at a cost of 50 lakhs. We can take this take the expense reduction for license period in equal installments. 1/4/19 for a period of 10 years. Assuming the telecommunication license is transferred by X is in previous year 21-22, say 32 lakhs, 43 lakhs, 53 lakhs. There are 3 options here and 3 cases. If whole license is transferred, part of the license is transferred. Explain how transfer should be dealt in with under Income Tax Act 1961 and amount, if any, deductible for assessment year 22-23. Okay. See, I did not explain you in the concept this one because we will anyway discuss it here. So what we should, in case of any sale, how we should treat that license? First, we should calculate WDV. They did not give that. So per cost is 50 lakhs when it is 1/4/19. From now up to 10 years, we need to take the deduction. So already we so 50 lakhs by 10 years means 5 lakhs. Already till 31st March of 2021, we have taken the depreciation deduction. So 5 lakhs. 5 lakhs for assessment year previous year 1920. 45 lakhs will be WDV as of 1/4/20, and for previous year 2021 another 5 lakhs we will deduct as on 31/3/21. What will be that? 40 lakhs. Means it, what is the assessment year? 21-22. previous year 2021. Now what they told in previous year 21-22 means previous year 21-22, that is in the next year they have sold it. Okay, and they are asking what we should do if they sold for 32 lakhs and they have whole of the licenses transferred for that amount. So we have almost three scenarios in that. We should calculate for whole license transfer, part license transfer. So 3 to the 6 cases we have to discuss it now. 32 lakhs, 43 lakhs, 52 lakhs. 32 lakhs, 43 lakhs, 52 lakhs. WDV is 40 lakhs. So once calculated for whole license is transferred. So in first case it is 32 lakhs. So what is the WDV? 40 lakhs. So 40 lakhs minus 32 lakhs, we have 8 lakhs. See, total asset is sold. So we do not have asset at all. So how can we maintain this? We have to transfer to P&L account. Take complete expenditure now only. Okay. Next one. For 43 lakhs, 40 lakhs it is sold. It is WDV, and 43 lakhs it is sold. Then the remaining 3 lakhs will be the gain. See, for 40 lakhs we have that in our books, but we sold it for 43 lakhs, means more than our book value. Then 3 lakh gain it is there, we can tax it at PGBP. In the third scenario, 52 lakhs. See, this is over and above the original cost. Original cost itself is 50 lakhs. If more than original cost, then the difference between the sale value and original cost, it will be the capital gain. This will be calculated in capital gain, and the remaining 50 lakhs will be then, see, this is the difference between 52 minus 50 lakhs. Difference between 50 lakhs and 40 lakhs WDV will be taxed as 10 lakhs PGBP. In that way we need to calculate. Because we are recognizing this here, income or expense, gain or loss of 8 lakhs now itself, because whole license is transferred, we do not have asset at all. So we know there is no meaning of maintaining the balance. So we are transferring the balance to either gain if it is positive or else loss. See, the second scenario is only part sold, partial. And in that first case is 32 lakhs it is sold. So again 40 lakhs minus 32 lakhs, WDV is 8 lakhs. What we should do with this? See, asset is there, WDV is there, means balance is there in asset. We should take the this expenditure we should expense this over a period of remaining license period. Okay, remaining license period is 8 years, because we have done with 2 years here. 5 lakhs we have deducted, no? So remaining 8 years were there, so we should charge this for 8 years, means 1 lakh per annum. We should expense that one. Here we do not have asset at all, so we have we have charged total expense now only. As we are having here asset, we should spread over the year of license. And the second case, 40 lakhs for minus 43 lakhs, 3 lakhs. See here, asset is balance is nil. Okay, we have sold more than WDV. Then same, we have to take it as PGBP gain. Third one also same. We have sold for more than our WDV, means it is a gain for us. Even though asset is there, we cannot charge. There is no WDV, no, first of all, to charge it to next 8 years. So we have to take the total income. Here same capital gain for 2 lakhs, which is more than cost, and for PGBP for 10 lakhs, which is more than WDV. Okay, that's the answer. Coming to the next topic, specified business. See, if we have entered into some specified businesses, we will get some deduction. Okay, for what? For all the capital expenditure. Revenue, however, we will get, but capital expenditure also we will get, except if we invest in these three things, we do not have any deduction. And anything other than this, means the plant and machinery, all that, we can claim the deduction. Okay, but business should be new. It should not be out of all splitting, that all amalgamation, demerger, anything should not be there. Newly freshly started business should be there, and plant and machinery should be new. But there are two exceptions for plant and machinery. One is, it can import old plant and machinery. Even though it is old plant and machinery, if we import that, we can take the deduction for that. And from the total asset, 20% can be old. Okay, no depreciation should be charged, because we have already taken 100% deduction of that cost, no? So now no depreciation should be charged. And loss can be carried forward indefinitely, but can set off only against specified business profits income. And assets should be used for 8 years. Okay, if the company becomes it is not in a good position, then no such condition they can sell. Okay, whenever they sold, our PGBP will be the sale price. Okay, if they transferred to non-specified businesses, means we do not have any sale price now, just we have transferred, then what we will be the sale price? We should charge some income to PGBP. What income? Deduction already claimed, means it is a cost. No, that only we will claim as deduction, minus depreciation till date. See, if we have not taken that 100% deduction of that asset, we must have charged some depreciation. Calculate that entire depreciation now only. That depreciation we need to take that, and WDV, nothing but WDV. If 100% deduction is not taken, we will have some cost minus WDV every year, no? So after the cost minus depreciation every year, that WDV we should take that as income and PGBP. And this will be the cost for person who purchased this asset, that for non-specified businesses. And if what if this sold after 8 years, what if it transferred after 8 years, there will be no PGBP at all. Okay, what are the specified businesses? Government, they have given, India has given some specified businesses. Only if we have started these businesses, we will get the deduction. There are only specified businesses, means not etc. is not there for this, only the 12 businesses. Actually some more are there, but I have merged here itself. And first five four is relating to agriculture. Okay, agriculture is the most given priority in India, so agriculture products will be given some benefits. Honey production is given that direction. Production of fertilizers in India, see it should be in India. And warehousing for sugar, any other agriculture produce, see any warehousing facility given is for agriculture produce is specified business. Cold chain facility means for some produce needs some cold storage area uh, for surviving for future. So if we are providing such facility, then we can have this direction. Cross country pipeline of natural gas or oil. Okay, inland container depot, hospital with at least 100 beds for patients, hotels of 2 star and above, 2 star, 3 star, 4 star, 5 star, like that. House construction projects under slum development scheme, we are constructing houses for under slum development scheme or affordable housing scheme, not for luxuries. Okay, for poor people, if we are constructing, then that business can claim the direction. Slurry pipeline for transportation of iron ore, semiconductor wafer fabrication manufacturing unit, developing and maintaining operating new infrastructure facility. All these specified businesses can claim direction of their capital expenditure. Okay, this is precise. We have here example. Mr. A commenced operations of business of setting up a warehousing facility for storage of food grains, sugar, edible oil on 1/4/21. He incurred capital expenditure of 80 lakhs, 60 lakhs and 50 lakhs. What are the specified business in this? Warehousing facility of storage of food grains. Any agriculture produce they have given, no? So this is a specified business. Sugar is a specified business, warehousing of sugar. Edible oil is not an agriculture produce, nor sugar. So storage facility given to that is not eligible for deduction under 35 AD. Okay, and so edible oil, food grains, sugar. We have made expense of what we call capital expenditure of 80 lakhs, 60 lakhs and 50 lakhs. See, 100% deduction is available only for specified businesses. What other business should do? Like normal business, if they invest in some expenditure, they need to take the depreciation on them. That okay. So for edible depreciation, we need to calculate. For this one, 80 lakhs deduction is available and 60 lakhs for sugar it is available respectively. On purchase of land and building during the, okay, they invested the 80 lakhs, 60 lakhs and 50 lakhs for both land and building, but with for land it is not available, no deduction is not available. So we should reduce the value of land from that during the January to 2021. Okay, January 21 to March 21 exclusively for above businesses. So when they invested, they started on 1/4/21, but they purchased it from so before commencement, before commencement of the business, they have purchased the assets and capitalized the same in the books of accounts on 1/4/21. Cost of land included in the above figures is 50 lakhs, 40 lakhs, 30 lakhs. See, for depreciation also we should not include land value. So depreciation on it edible oil 50 lakhs, and here 10 lakhs we should minus. So see, cost of land is 50 lakhs, 40 lakhs, 30 lakhs, respectively. The last one is edible oil. So 50 lakhs is the total amount minus 30 lakhs is the value of land. So depreciation on 20 lakhs. So what is the rate of depreciation for building? 10%. And we have used the billing for whole of the year, means we have billing from 1st April 21 only. So only 10% we should charge. Next, 80 lakhs is the total amount and 50 lakhs is the value of land for grains. Then only 30 lakhs deduction is available. And 60 lakhs is the total amount, 40 lakhs is the value of land. So 20 lakhs depreciation deduction is available on under 35 AD. Okay, during the previous year 21-22 he incurred capital expenditure of 20 lakhs. This is during the year. Okay, this is before the year, this is during the year. 20 lakhs, 15 lakhs plus 10 lakhs. 10 lakhs is for edible oil. So here we have to calculate depreciation for 10 lakhs also. And here we have to add 20 more lakhs. Here 15 lakhs. Okay, I think if it is confusing, I'm sorry, but read the question and try to solve it on your own. For extension and reconstruction of building, see, it is for building, so depreciation rate should be taken 10% only for that also. And building is eligible reduction, so we have taken here 20 lakhs and 15 lakhs respectively. This is the total amount of deductions. So the profit from the business of setting up of warehousing facility for storage of food grains, sugar, edible oil before claiming deduction under 35 AD and 32. 32 is for depreciation. So they are telling that they haven't calculated depreciation also. For assessment year 20 to 23 is 16 lakh, 14 lakh and 31 lakh. So 16 lakhs, 14 lakhs, 31 lakhs. Compute the income under the head PGBP for the assessment year 20 to 23. Means 21-22 is the previous year, for this year only. And loss to be carried forward assuming that Mr. A has fulfilled all the conditions specified for claiming the deduction under section 35 AD and wants to claim the deduction under section 35 AD and has not claimed any deduction under chapter 6A under the heading deductions in respect of certain incomes. Assume in respect of expenditure incurred, payments are made by account paycheck or use of ECS through bank payment. So this is the only information. And see, for 20 lakhs we have to calculate 10%. For 10 lakhs we have to calculate 10%, and gross total is 3 lakhs. So 28 lakh is the income, PGBP income, but we cannot take this income to set off the loss incurred by the specified business because it is not the specified business. No, that's fine. Here $16 lakhs minus 30 lakhs minus 20 lakhs. 34 lakhs loss is there. For sugar business, 14 lakhs minus 20 minus 15. 21 lakh loss. 21 plus 34 in the sense total 55 lakhs loss can be set off and carry forward indefinitely. And next year they can set off again as the only specified income, any other specified income, but they cannot take a deduction for non-specified income. See, loss can be carried forward set off indefinitely, and again only against specified business income. They can take set off against only specified business income. Okay, I have to check with the answer. It is same. This is another business. XYZ commenced operations of business of new 3-star hotel in Madurai, Tamil Nadu on 1/4/21. Company incurred capital expenditure of 50 lakhs during the previous year. So capital expenditure, this is the eligible mode because hotel for more than or 2-star or above. This is 3-star, it is eligible. uh, During the previous period, company incurred capital expenditure of 50 lakhs during the period January 21 to March 21. Means before starting the business, they have incurred their capital expenditure exclusively for above business, for this business only, and capitalize the same in the books of account as on 1/4/21. Further, during previous year 21/22, it incurred a capital expenditure of 2 crore, out of which 1.5 crore is land. Exclusively for above business means only 50 lakhs they can take 50 lakhs from above. Compute the income from head PGBP for the assessment year 2023, assuming that XYZ has fulfilled all the conditions specified for claiming the deduction under 35AD and opted for claiming the deduction under 35AD and has not claimed any deduction under chapter 6A under the heading deductions in respect of certain incomes. Okay. Profit from the business running in hotel before claiming deduction of 35 AD in assessment year 2023 is 25 lakhs. This is the expense, this is the expense. Assume that company also have another existing business of running 4-star and above, which commanded operations 15 years back. The profits are 120 lakhs for assessment year 22-23. Also assume that expenditure incurred during the previous year is previous year 21-22 were paid by account pay check or use of ECS through bank account. So another business 120 lakhs is a profit. Okay, so 75 lakhs will be the loss. It can be set off against this income because it is also specified business income. Total 45 is taxable for assessment year 22-23. So next question we have for 3. ABC Limited is a company having 2 units. Unit A carrying specified business of setting up and operating of warehousing facility for sugar. Means it is an eligible specified business. Unit B carries a non-specific business of operating warehousing facility and for storage of edible oil. They only said it is not specified. Unit A commenced operations on 1/4/20 and it claimed deduction of 100 lakhs incurred on purchase of 2 buildings for 50 lakhs each for operating the warehousing facility for storage of sugar under section 35 AD for assessment year 21-22. However, in February, Unit A transferred one of its building to Unit B. Examine the tax implications for such transfer in the hands of ABC Limited. See, for 1/4/20, it purchased that one and it should use it for 8 years. What is the previous year? 2021. Assessment year 21-22. And how many years they should use? Like this 8 years they have to use. But in February 22, what is the assessment year? 22 23 means in the next year itself they have sold, transferred to another business. See, sold means total sale value will become the PGBP of selling department. But here they have transfer. Transfer means they have discussed this one. We should take the original cost minus depreciation. They must have deducted till now. So 50 lakhs is the value of asset. Depreciation is 5 lakhs, means 10% of our buildings it is 5 lakhs, and 45 lakhs will be the PGBP income taxable for unit A, and this will become the cost for unit B. That's it. Till now we have completed big uh, sections regarding deductions. So the next deduction is preliminary expense. What is meant by preliminary expense? Expenses we have incurred before commencement of business. It might be the legal fee, like that. There will be a lot of expenses. So this deduction is so we have incurred that expenses before business. At that time we do not have any profits to less that, no. So it is given beneficial to resident to deduct that expense after commencement of business. Okay, how much amount of, what is the amount of deduction available? If it is an Indian company, actual expense incurred or 5% of COP, cost of production, so cost of project, or capital employed. From this we have to take the highest amount. On that we have to calculate 5% in or actual amount, whichever is lower. Okay, we have to practice this and remember this in order to uh, not to get confusing. So what is the amount of deduction? Actual or 5% of COP or CE, means cost of project or capital employed, whichever is lower. So from both of these what we should adopt? Whichever is higher we can take that. Okay, remember like this. In case of any other resident assessee, if it is this is for Indian company, this is for any other resident assessee. If it is non-resident, no deduction is available. Only for residents it is available. Here I told, no. So if it is a company like this, or else it is a person like any other resident assessee, actual or 5% of COP, cost of project, whichever is lower. See, what is the cost of project here? Means whatever we have invested in fixed assets for starting a new business, or in case of any new extension or new unit we have started, all that amount will be called as capital cost of project. On that we can take 5%. But for Indian company, capital employed is given, because we know, no, for only companies we will have this share capital debentures, long term borrowings for new project or extension of setup new unit on the last day. On the last day we have to take all these amount, and we can take whichever we can compare with the cost of project, whichever is higher we need to take that, and on that 5% we have to calculate and compare it with actual expense. We should take the lower amount. Okay, capital employed does not include reserves and surplus and securities premium. This both should not be included in capital employed. And deduction is available for 5 years, means total amount of deduction we will calculate here. Now how much it is available, we should divide that with 5 and we should apportion it into 5 years. Okay, now these are small topics 35 CCC, expenditure on agriculture expense extension project. This is available to all the SSCs whoever spend on agriculture extension, and 100% of the expense is allowed as deduction. But the deduction is not available to land and building. See, in these both cases we will see about land and building also, because till above we have seen only for land it is not available any deduction. From here for this both only, building is also not allowed. And next one, expenditure for skill development project. It is available only for company if they invested any amount in skill development. So 100% is available, but for land and building it is not available. And any expense on amalgamation demerger is eligible for 5 equal installments. We can take for 5 years in equal installments, and it is available only to Indian company. Indian company means domestic company. Expenditure on voluntary retirement scheme. This is available to all the SSCs in 5 equal installments. See, for agriculture extension project is for all SSCs, and voluntary retirement scheme is for all SSCs. Skill development is for companies. Amalgamation demerger is for Indian companies. Here 100% expenditure is available in a single year, skill development also for single year, but amalgamation demerger voluntary retirement scheme is eligible for 5 years. One more 5 years is available where the preliminary expenses for 5 years. Taxation of mining of coal, limestone, iron and zinc. See, if any expense is incurred for searching and development, only these two. Searching and development of mines in the year of production or 4 years from the year of from the preceding that year. See, before that from 10 years I am doing that searching. I need deduction of all the expenses not available. Only 4 years back and now in the year of production, whatever the expense we have incurred, we can amortize that for 10 years from production. Okay, above we have studied 5 years and here it is 10 years. Unabsorbed expenditure can be carried forward and allowed along with installment up to along with next year installment up to 10 years. See, for example, here 5 lakhs is a profit, but this year deduction is 10 lakhs. So 5 lakhs can be carried forward to next year. See, suppose here 25 lakhs is the income. Here this year 10 lakhs plus last year 5 lakhs, 15 lakhs we can take that expenditure, and we get 10 lakhs will be the income. Okay, but if it is a last, it is only eligible for 10 years, not indefinite period of time, maximum up to 10 years, no. So till 10 years wherever income is there you can deduct with that income. So next, some eligible business directions. In case we have taken discount on zero coupon bond, we have to amortize it for lifetime of the bond, over the life of the bond. Employer contribution for benefit of employees. If employer has contributed anything, if it is to recognized or approved fund like recognized provident fund, gratuity fund, all that, deduction is available subject to 43B. What does 43B says? Deduction available only if actual payment is made. Okay, not on accrual basis. Actual payment should be made, then only deduction is available. We can it is available only if it is payment is made to recognized or approved provident fund. In like others unrecognized and unapproved funds they have invested, no deduction for that expense. Employer contribution in the pension scheme under 80 CCD. So employer contribution will be there, no, that one. Actual how much deduction is available? Actual contribution or 10% of salary. Salary includes basic plus dearness allowance, whichever is lower. This much deduction is available, and deduction allowed subject to 43B. Okay, means actual payment should be made till the due date of return filing of return of income. Illustration number 10. See this one. X Limited contributes 20% of basic salary to the account for each employee under the pension scheme. Refer to the section 80 CCD. Dearness allowance is 40% of basic salary and it forms part of pay for employees. Compute the amount of deduction available under section 36(1)(4)(a) if basic salary of employees aggregate to 10 lakhs. Would disallowance under section 40(a)(9) be attracted, and if so, to what extent? See, what is the actual amount of deduction should be made? 10 for 10 lakh salary, 40% is dearness allowance, means 14 lakhs. No? This is the salary. We should take 10% of that, means 1,40,000. What they have taken 20%, means 2.8 lakh. Whichever is lower, means 1.4 lakhs. They have already taken 2.8 lakh. So minus 1,40,000. Sorry, here they have told 20% of basic salary they have taken, but what we should do, salary includes dearness allowance, they forgot to take that, so we should take that. So 20% of 10 lakhs means 2 lakhs only, so they have taken only 2 lakhs, and what is the actual amount should be taken? 1.4 lakhs. So what is the difference? 60,000. Okay, this we should disallow it now. We should not take it as an expense. And next one, employee contribution towards PF ESI superannuation fund, and employer should deposit that amount on or before due date of that fund. Like for specific funds, specific due date will be there, that is 15th or 7th, like that. We should deduct, we should pay that, employer should pay that amount on or before such due date, then only deduction is available. If they paid after due date, then also no deduction is available. Even if they have paid before the end of the year or before the end of date of return of filing of income, but they have not paid due before due date, then deduction is not available. Okay, this is the employee's contribution, employee have to pay, and it should be before the due date of that particular fund, then only deduction is available. What if we have bad debts? If actual bad debts we have incurred for sales, then we need not, so we can take the reduction of that bad debts. We need not prove that we have incurred bad debts, we can simply take the reduction of that. But we have given some loan and they are not repaid it one, it is not related to sales, separately we have given that one, then such expense cannot be allowed. Provision for bad debts not allowed, only actual debts are allowed. Provision for bad debts is allowed only for banks, that we will discuss it here. Recovery is taxable, but assessee claimed and recovered is same. Okay, in case they have incurred some bad debts and they have taken that expense previously, later on they realize it that from the customer, then it is taxable in PGBP. But the only thing is assessee and person recovered should be same. For example, if partnership firm has incurred some bad debts and they have taken some that direction, later on partnership dissolved and one partner realized that amount, can he need should he tax that amount? No, not necessary. And next, provision for bad debts of bank. See, they can take allowance only if it is provision for bad debts. Actually, they cannot take. So, for Indian banks, how much provision they can take? Anything like 50%, 100%, they cannot take. No, we should give some rate. What is that? 8.5. This is important. It will be asking questions. Remember these rates. For Indian bank, 8.5% of gross total income plus 10% of aggregate average advance made by rural branches. Okay, this will be given in the question itself, everything. Just remember the rates: 8.5% of gross total income and 10% of advance made by rural banks. That amount of provision you need to take. If it is a foreign bank or state corporation or state financial corporation, state industrial investment corporation, business public financial institution or NBFC, take 5% of gross total income. Okay, 8.5%, 5%. Here extra 10% of advances made by rural bank branches. In case we have incurred any expense for promoting the family planning of employees, then if it is a revenue expense, take 100% deduction. If it is a capital expense, take 5 allowance in 5 installments. If we have incurred any securities transaction tax or commodity transaction tax, we can take the deduction, but only if the shares are held as stock in trade. If we are maintaining as capital asset, we cannot take the deduction. Deduction for financial corporation engaged in providing long-term finance, that is more than or equal to 5 years, minimum 5 years. Then we can take the deduction. How much? Actual amount transferred to specific special reserve, or 20% of PGBP, or 200% of share capital plus reserves and reserve. See, we should take 200% of both the aggregate of these minus opening balance in reserve. Already opening balance will be there, no? That we need to reduce now. That minimum amount we can take the deduction. Any amount withdrawn later will be taxed. Market to market loss or expected loss. In ICDS we have studied that we can take a deduction of any actual expenditure made. And we have some general deductions here. We can take expenditure deduction of any expenditure only if they satisfy these 3 conditions. It should be revenue in nature, it should be for business or profession, revenue in nature, and it is legal. It should not be for any illegal activities like giving bribe. I need to take deduction. It is not possible. So there is some examples here. Corporate social responsibility, it is not incurred for business, so no deduction is available for that. Advertisement by political party, no deduction is available. Anyway, deduction under 80 GGB is available. Dividend and dividend distribution tax, it is also not for the business, so no deduction is available. Secret commission, I told no, only legal expenses are available. Secret commission, bribe, payment to gundas, all these are not available. Contribution to electoral trust, other donations, same as political party, it is not allowed, but under 80 GGB it is allowed. Provision for loss of subsidiary. See, this is important to remember. Provision for deferred tax or income tax. Provision for diminution in the value of assets. Provision for unascertain liability. All these are not allowed expenses. Share issued. we have incurred some expenses. Can we take the deduction of that? Yes, but only if it is buyback or bonus issue. If it is a revenue expenditure, means we should not have any increase in capital because of that expenditure. Then because of that issue, then only we can take allowance. If it is a right issue, we will have increasing capital, IPO, FPO, all that increasing capital will be there. So it is not eligible for uh, taking the direction. Just simple, it is a revenue purpose, direction is available. Capital purpose, not available. Debenture issue expense is available. Discount on issue of debentures is allowed over the life of debentures. It should be amortized. Tax on non-monetary perquisite of employees if paid by employer. See, employer gave some non-monetary perquisite to employee and he only paid the tax on that. Is he eligible to take deduction of that? No. Premium paid on Keyman insurance policy is allowed. See, starting we have discussed, no, he'll be business will be paying premium for Keyman insurance policy. All that expense will be allowed because it is for business. And sponsorship fees is also allowed. Non-compete fee is for business, it is allowed. Loss due to theft, if incidental to business, it is allowed. Finally, see, if we paid anything to direct tax, then like income tax, no deduction is available. If it is tax, not allowed. If we have paid interest on that, not allowed. If we have paid penalty, not allowed. If we got refund, not taxable. If it is for indirect tax, allowed, except penalty. Penalty is not allowed in any case. But if it is tax, we have paid GST, allowed. We have paid interest on that, it is allowed. Only allowed only if paid till due date of return of filing income. And refund is taxable. Okay, interest, we have taken loan for payment of income tax, and if we have paid interest on that loan, then it is not an allowable expense. For income tax, nothing is allowed. Okay, just remember that. Illustration 11. It includes all the expense. ISAG Limited is a company engaged in the business of biotechnology, and net profit for the financial year 31/3/22 is 35,25,890 after debiting the following expenses. See, they have already taken the following directions. Now we have to confirm whether they are genuine or not. See, 35,25,890 net profit. Okay, only 10 expenses. Purchase price of raw material used for the purpose of in-house research development. See, revenue expenditure, it is raw material, no, revenue expenditure after commencement of business, then expenditure is allowed. So we need, they have already taken this direction, so we need not add that. Purchase price of asset used for in-house research development. See, for land it is not available, but for building it is available. So for land we have to add back. Do not add for building. Expenditure incurred for notified agriculture extension project. So it is available. Direction not need not take. Expenditure on notified skill development project. Purchase of land. See, for both of this, land and building is not allowed. Okay. For purchase of land 40 lakhs we need to add back. And expenditure for training the skill development, no, we can take the direction. Expenditure incurred on advertisement of software in software published by political party, we cannot take that expenditure, so add back that 75,000. Expenditure for right issue, this is a capital expenditure. We should not take deduction of that expenditure. So 80,000 should be added. And issue of debentures, so we can take the direction of that. Penalty, we cannot take, 35,000 should be added. Interest paid on loan taken from bank for payment of advance income tax, any income tax, it is not allowed, 60,000 should be added. Provision for loss of subsidiary, we cannot take that expense, we have studied it now only, 85,000. So add back all the ineligible expense. So we got an answer 83 lakh 60,890. Okay. And next, amount not deductible. TDS should be deducted. See, we cannot take the these expenses because they have deducted some TDS and paid to government. They have to deduct some TDS and pay to the government, but they have not paid or not deducted at all. There is a custom, there is a rule that we have to make while making some expenses, we have to deduct and pay the TDS to government, but they did not deduct or pay to government. In any of the case, we have to disallow some expenses. If the payee is non-resident, 100% deduction is not allowed, means we have to disallow 100% of the expenditure. If it is paid to resident, we can disallow 30% of that expenditure. If paid or later deposit, later if in the next year they have paid that amount or deposited that amount, then in that year we can take this expense, we can allow in that year. If payee files return of income, one exception will be there, no, to not to disallow this. What is that? Payee should file return of income, consider that amount whatever we have paid to them, salary or else that anything, and paid tax on that, then payer can take allowance of that expense. Okay. If equalization levy is not deducted or paid to government, 100% is allowed. Allowed when it is paid. Simple, same as non-resident. What we have to disallow here? Expense. See, for us expense means, for them income. We have paid some salary. Then we have to deduct some TDS, but we have not deducted. If it is paid to non-resident, then 100% of salary should be disallowed, means add back to the PGBP. If it is paid to resident or any other person, then 30%. Then 30% of that salary should be disallowed. Means 70% we can allow, 30% disallow. Illustration 12-13. Delta Limited credited the following amounts to the account of resident payees in the month of March 2022 without deduction of tax. Okay. We have made some payment to resident persons, but we have not deducted tax for them. What would be the consequence of non-deduction of tax at source by Delta Limited on these amounts during the financial year 21-22? Assuming that resident payees in all cases mentioned below have not paid tax, they also did not pay, which are required to be deducted by Delta Limited. Salary to its employees, they have paid 12 lakhs. So on this 30% should be disallowed because they have not deducted TDS and they are resident person. So only 30%. If it is to directors remuneration, uh, created in March and paid in April, they have 28,000. On this also 30%. 12 lakhs into 30%, 3.6 lakhs. 28,000 into 30%, 8,400. Gross total 3,68,400. We should disallow this. What would your answer change if Delta has deducted tax on director's remuneration in April at the time of payment and remitted the same in July? So before payment of tax, they are deducting that amount. So it is an allowable expense. But when in the subsequent year only, they have paid in subsequent year, they can take deduction of the same in subsequent year. And next one, during the financial year 21-22, the following payments or expenditure were made incurred by Mr. Yuvan Raja, a resident individual whose turnover during the year ended 31/3/21 was 99 lakh. See, 99 lakh means he is not eligible for audit. Then he need not pay direct TDS on some expenses, but on some expenses he need to take. We should check all that and tell. Interest of 45,000 was paid to Rahman, a resident partnership firm, without deduction of tax. So here he is not eligible for audit, then he need not pay the tax on that, and he has not deducted, so no complaints, no disallowance here. Ten lakhs was paid as salary to resident individual without deduction of tax. Okay, see, salary means it we have to take deduction of that, we have to deduct TDS on that, even if we are not eligible for audit. Okay, so they have not deducted, so 10 lakhs into 30%, 3 lakhs will be the amount to be disallowed for them. Commission of 16,000 was paid to Vidyasagar without deduction of tax at source. So for them, as he is not eligible for audit, they need not pay the deduction. Take the TDS on that, and no deduction for that is necessary. No disallowance should be made for that. Only 3 lakhs amount of deduction disallowance. Next, cash payment not allowed. So when it is not allowed, if we have paid to a single person in a single day through cash bearer check, cross check, any amount which is more than 10,000, then such payment is not allowed. For transporter, the limit is 35,000. He can pay in cash up to 35,000. For the others, it is 10,000. But in few cases, it is allowed where it is a if it is made in village and there is no banking facility for them, then we can make cash payment of any amount. And salary is paid to employee who transferred to place other than the normal place. Their actual duty is not there, but due to some transfers he went there and worked for more than or equal to 15 days. Then we can pay that amount for that cash amount to him. And paid to farmers, any agricultural produce we have paid to farmers, we can pay in cash for any amount, but not for middlemen. Middlemen will not include it in farmers, only for purely for farmers it is available. Okay, payment of interest and remuneration by firm or LLP to partners. So firm will pay some remuneration, salary, interest, or all that, no, to partners, whether it is eligible or not. Interest is eligible, but maximum of 12% per annum, and it should be authorized by partnership deed. Remuneration is allowed, but only to working partners, and it should be authorized by partnership deed. But there is a maximum remuneration which need to be allowed, that is, for first 3 lakhs of book profit, 1.5 lakhs or 90% of book profit, whichever is higher. Okay, for first 3 lakhs. On balance book profit, 60,000. 60%, sorry, 60% of that book profit is allowed. Book profit in the sense profit minus depreciation plus remuneration debited. We have paid some remuneration, no, it should be added back, and we have to take direction of the depreciation, and on that first we calculate 90% of that, and we compare with 1.5 lakhs, sorry, first 90% on 3 lakhs, or 1.5 lakhs, whichever is higher we need to take. From 3 lakhs to whatever we got big profit, on that 60% we can pay addition of some of that, some of this we can pay. Okay, this is the maximum remuneration. Anything paid above this should be added back to the PGBP. And check interest limit only if individual is a partner and received loan in same capacity. See, I was a partner. See, individual is a partner in partnership firm, but he received loan as some on representative on some other person, and got a interest from on behalf of representative. Then that interest limit is not available. Only if he is individual, and if he has taken in same capacity, in whatever capacity he is a partner, in that capacity if he has taken that loan, then only interest of that will be taken as a expense. And we should calculate the maximum amount for that limit. If not in the same capacity, then they can pay to any amount. There is no such limitation. If partnership deed retired, then his share of losses cannot be carried forward. See, clearly examine here. Losses cannot be carried forward, but unabsorbed depreciation can be carried forward. Don't confuse this. This is an important point which will come a lot of times later. Losses, they cannot take depreciation, they cannot take the share of person who is not there in firm today, but they can take their unabsorbed depreciation. Section 9b, what does it tell? If any stock is given to the partners and FMV of such stock is taxable for under PGBP in the hands of firm. Okay, they have given freely to any partner, then it is taxable as PGBP. At what rate? Fair market value. So 13, 14, 15 are the questions. A firm assessed as such has paid 7.5 lakhs as remuneration to its partners for previous year 21-22 in accordance with the partnership deed, and it has a book profit of 10 lakhs. They have directly given the book profit, no, and as computed under section 40b, they have computed book profit and they have given the 10 lakhs. What is the remuneration allowable as a deduction? See, on first 3 lakhs, 1.5 lakhs or 90% of 3 lakhs, that is 2.7 lakhs, whichever is higher. So 2.7 lakh is higher. On balance amount means 7 lakhs is the total amount is 10 lakhs. On the first 3 lakhs like this, after deducting that 3 lakhs we will get 7 lakhs. On 7 lakhs we have to pay 60%, that is 4.2 lakhs, then 6.9 lakhs. See, they have, this is the maximum deduction allowable, but what they have paid 7.5 lakhs. So difference of that will be disallowed, means should be added. 60,000 should be added back to PGBP. Next, 15th question. Rao and Jain, a partnership firm consisting of two partners, reports a net profit of 7 lakhs before deduction of the following incomes. Okay. Salary of 20,000 per month payable to two working partners of the firm as authorized by the deed. Depreciation on plant and machinery 1,50,000, they have not taken that. Interest on capital at 15%, the amount capital eligible for interest is 5 lakhs. The amount of capital eligible for interest is 5 lakhs. What is the formula for book profit? See, they have given calculate book profit. What is the formula? Normal profit they have given minus depreciation, add back any remuneration they have paid. But here they have given the net profit from which salary is not deducted. So we need not add back that amount. We need to deduct depreciation and some other expenses like interest. See, 7 lakhs minus depreciation 1,50,000 minus interest. What is the correct interest rate? Maximum 12%. So 5 lakhs into 12%. This much only we can deduct. So 7 lakhs minus 1,50,000 minus 60,000. 4,90,000. This is the book profit. On this first 3 lakhs, 90%, that is 2.7 lakhs or 1.5 lakhs, whichever is higher than 2.7 lakhs, and balance book profit 4 means 4,90,000 minus 3 lakhs on 1.9 lakhs, 60%, 1,14,000. Add both of the 2 lakhs, 3,84,000. It is a maximum amount of remuneration, but what they have paid 20,000 per month to two working partners, means 20,000 each, means for 2 persons for 12 months 4,80,000 they have taken. So minus 3,84,000 000. We should disallow 96,000 or see 96,000 since it is not actually deducted, we should take maximum of this expense. Okay, that's it. So allowable working partner salary for a assessment year 2023. What is the allowable salary? 3,84,000. What they have paid? 4,80,000. 3,84,000 is the allowable one. And next one, expenses allowed on actual payment basis, means we have 43B. We will be referring this a lot of times. So we will get the deduction of that expense only if we have actually paid that one. It is not allowable on accrual basis. Okay. For any tax, duty, cess, employer contribution to any fund, bonus or commission to employees. Salary is allowed on accrual basis, but for bonus they need to pay it on actual basis. Interest on loan to banks, leave encashment, amount payable to railways for use of railway assets. Payment can be made up to the due date of return of filing of return. May not be till 31st March, but up to the date of return of filing they can pay, and they can take the deduction. If paid in next year, deduction available in next year. Same like TDS. Furnishing bank guarantee cannot be treated as actual payment. See, bank guarantee is not the payment, so we should actually pay that one. So one more thing is, if interest is converted into loan and we have paid that loan, such conversion is not a payment. Okay, that loan should be actually paid. So actually loan is paid in installments. No, that installment amount is allowed as deduction. Deduction allowed if installment of loan is paid. Only if it is paid it is allowed. Okay, what I told here, if interest is converted into loan and such conversion is not any payment, so we cannot take deduction of that. But when actual installment of that loan is paid, we can take deduction of that. Here recently added amendment is, loan loan also includes debenture. Okay, means interest is converted into loan or borrowing or debenture, then also it is not the actual payment, the deduction is not available. And when actual payment is allowed, payment is made in installment, then we can take deduction of that. Okay, up to here we have done with all the directions for calculating the PGBP. Okay, here we are up to here we have done with all the expenses. Next one, section 44 EAA. It is who should maintain books of accounts and what books of accounts they should maintain. For notified professionals, who are notified professionals? Legal, medical, engineering, architect, accounting, technical, consulting, interior decoration, film artist, CS, IT professionals. All these persons maintain books of accounts only if gross receipts exceed 1.5 lakh in all the 3 preceding previous year. Actually we have example here, 16th one. We will discuss after this concept. So all these notified professionals need to maintain books of accounts only if gross receipts exceed 1.3 lakh in all the 3 preceding years. Okay, all the 3 years if they exceed, then they can take that expense. Then they need to maintain the books of accounts, or likely to exceed in current year. Previously they have not exceeded, but it was pretty sure that current year they may exceed 1.5 lakhs. Then they have to maintain books of accounts. See, actually this is mandatory to be maintained, because any of the professional will be earning more than 1.5 lakhs per annum. Obviously everyone will be earning that amount, so we have to maintain books of accounts, all these professionals. What books of accounts? Cash book, journal, ledger, carbon copies of bills more than 25 rupees, and daily case register and stock register in case of doctors. Oh, these two is available if it is a doctor only, that is medical professionals. And any other business or profession other than these professionals, in case of they are carrying any business or profession, then in case of individual, if turnover is more than 25 lakhs they need to maintain books, or if profit is more than 2.5 lakh they need to maintain the books. Any of the two conditions is filled, they need to maintain. And in any of the one previous year, any one of the 3 previous years, see, in all the 3 previous years they need to check here any one of the 3 preceding years They need to check turnover 25 lakhs, profit is 2.5 lakhs. Here gross receipt is 1.5 lakhs. Any other person, this is a case of individual. They have given more limit for individual, but for any other person, turnover is more than 10 lakhs and profit is more than 1.2 lakhs in any one of the three previous years, then they need to maintain the books of accounts. Okay, 25 2.5, 10 1.2, remember. And any one, if they exceeded in any one of the 3 years, then they have to maintain accounts. That book should be kept for minimum of 6 years. If not maintained, penalty is 25,000. Okay. So Hari, an individual, carried on a business of purchase and sale of agricultural commodities like paddy, wheat, etc. Okay, he's doing some business. He borrows loans from Andhra Pradesh State Finance Corporation and Indian Bank and has not paid the interest as retail lender. From Andhra Pradesh 15 lakhs, Indian Bank 30 lakhs. Total 45 lakhs is the outstanding interest to be payable. Both APSFC and Indian Bank, while restructuring the loan facilities of Hari during the year 21-22, converted the above installments by Hari to them as loan payable in 60 equal installments. So divide by 60. How much they have to pay every year? 75,000. During the year 31st March 22, Hari paid 5 installments to APFSFC and 3 installments to Indian Bank. Okay. Hari claimed entire amount interest of 45 lakhs as expenditure while computing the income from business of purchase and sale of agricultural commodities. Discuss whether his claim is valid, and if not, what is the amount of interest, if any, available. See, mere conversion of interest into loan is not a deduction. So this is wrong. He cannot take that. How much he can take? Installments paid. He can take the deduction of that amount. So they have given 5 installments of SFC. SFC is 15 lakhs. See, 15 lakhs divided by, they gave a chance to pay in 60 installments. So each installment 25,000. So they said he paid 5 installments, means into 5 equal to 1,25,000. Indian Bank 30 lakhs divided by 60 into 3 installments, 1,50,000. So 2,75,000 they can take the deduction. Next question. Vinod is a person carrying on profession as film artist. So he belongs to first category. We have given some specified professionals. They need to maintain books of accounts. If the gross receipts is more than 1.5 lakhs in all the 3 previous years, preceding previous years, or they in the like they are about to exceed 1.5 lakhs in current year. Okay, that his gross receipts from profession are as under: financial year 18-19, 1,15,000. See, in the current year it is not exceeded. In the previous year there is no income only, so he need not maintain. What is his obligation regarding maintenance of books of accounts? Under section 44A of Income Tax Act 1961. So we have discussed in three preceding previous years it is not there, and in current year it is not likely to exceed. In financial year 1920, 1,80,000. So it is more than 1,50,000. it is more than 1.5 lakhs, so he need to maintain. And the financial year 2021, it is 2,10,000, which is more than 1.5 lakhs. So in current year it is exceeded, no, it is, so they need to maintain. In all the previous years it is not exceeded, but or here given, no, more than 1.5 lakhs in current year, so they need to maintain the books of accounts. Okay, done with this. So next one is tax audit. Who need to get their auditor tax get their audit done by CA? Turnover, two cases. Turnover is more than 1 crore, which need to check only 50 lakhs for profession. Okay, we have discussed on professionals, no? For them only 50 lakhs. Otherwise, turnover should be more than 1 crore, or turnover is more than 10 crores. 10, instead of 1 crore, it is 10 crores. When cash receipts is up to 5% of total and cash payment is up to 5% of total, means they have done all the transactions in bank through bank only except 5%. 5% is allowed. Okay, then we have to check limit for 10 crores. Otherwise, if cash transactions are there for more than 95%, sorry, more than 5%, then only 1 crore. Okay, see, when to get your book get your books of accounts audited? When turnover is 1 crore. In case of professionals, gross receipts, sorry, is this more than 1 crore? Gross receipts is more than 50 lakhs, or turnover is more than 10 crore. Only if that instead of 1 crore we are giving 10 crores. When we will give that benefit? If cash transactions is up to 5%. Okay, then we can give the limit to 10 crores. If these three got exceeded, then only tax audit is applicable. Other than that, if the assessee is claiming lower income under 44 AD or ADA, means for business or for business people it is 8%. We said if we will pay tax at 8%, then there is no need of tax audit. But if it is less than that 8%, we are opting for AD and we are paying less than that limit, then it is tax audit is applicable. Or 44 ADA. In case of professionals, we have to pay minimum of 50%, and here we are declaring lower income than 50%. Then also we have to get the books of accounts audited. And or assessee claiming lower income under section 44 AE, BB and BBB. See, AE is for transportation business, BB and BBB is for non-residents, for shipping business it is. So all of them should get their books of accounts audited. Who all all of them? Turnover is more than 1 crore, or gross receipts is more than 50 lakhs, or else turnover is more than 10 crore if cash receipts is up to 5%. Tax audit report should be filed 1 month prior to the due date of furnishing of return of income. Means 31st October is the due date, then they have to file up to 30th September. Okay, if not filed, what is the penalty? Above we have studied, if not maintain any books of accounts, then 25,000 will be the penalty. Here 0.5% of turnover or gross receipts, or 1.5 lakhs, whichever is lower. Tripled is the sorry, not even triple, it's more than that. And that's about tax audit. The last topic is presumptive taxation. What is meant by presumptive taxation? See, some individuals having we will give some threshold limits. that person, and with that threshold limit can pay tax, can show the income of that specified rate shown, told, and they need not get their books of accounts audited and need not maintain the books only. See, what is the presumptive taxation? 44 AD. Resident individual, HF, partnership firm doing business other than commission agency, and 44A here they have given, no. If they are not doing this business for that specified person and turnover is up to 2 crores, they have to declare the income of flat 8% of turnover. Okay. If no cash transactions for there, means 1% cash transactions also not allowed, then they can pay up to 6%. See, earlier we have studied here. Okay. See, if cash transactions is up to 5%, then they need then threshold limit is 10 crore to get tax audit. But here it is, if there are no cash transactions, they have to pay 6% of turnover for income under presumptive taxation of 44 AD. Okay. Don't confuse between them. They both are, one is tax audit and another is presumptive taxation. Presumptive taxation, if no cash transactions, we have to pay 6% of turnover instead of 8%. In usual cases, it is 8%, and no further expenses allowed from them. Okay, that's it. For these specified persons having this amount of turnover should pay this income. This is the presumptive taxation for 44 AD. 44 ADA. This is for resident individual or firm in profession. See here, this is not given for companies. This is for individual, for small people who cannot get their audit done. Then they can do like this. They can declare the 8% of turnover as income or 50% of gross receipts as income, and they can skip the maintenance of books of accounts. But the gross receipts should be up to 50 lakhs. Okay. 44 AE. Any person in transportation business and having vehicles less than or equal to 10. See, we need to remember this in order to answer the questions. This is important. Then how much we have to pay the tax, how much we should disclose the income. See, here it is 8% of turnover, here it is 50% of gross receipts, but here it is for heavy goods vehicle 1000 into weight of vehicle in tons into number of months per vehicle. Okay. For any other vehicle it is 7500 into number of months per vehicle. See, what is heavy goods vehicle means? More than weight is more than 12 tons. That vehicle weight is more than 12 tons. Then it is considered as heavy good vehicle, and for that heavy good vehicle, number of tons that vehicle weights into 1000 into number of months per vehicle, means number of months they have used that vehicle. And any other, if it is not heavy good vehicle, then 7500 into number of months per vehicle. See, we have example for this, we will do that. Don't get confused and remember this properly. In any SSC, for all the SSC this is available, and they should be involved in transportation business, and vehicles should be less than or equal to 10. They should not exceed 10 at any point of time. Okay. Only 40B can be claimed. What is 40B? The partnership partners remuneration, salary, all that will be there. No, they can claim extra that. Here, see, no expenses allowed for both of them. 44 AD, 44 ADA. But for 44 AE, they can get a deduction of 40B, that is salary paid to them. And Income to be calculated even if vehicle is not put to use. If we have that vehicle, we have to take the 10,000 into that vehicles and 7,500 into that vehicles. Whether it is used or not, we don't mind. All these three people can need not maintain the books of accounts. That's the only benefit they get from this section. It is called presumptive taxation, and the last four questions for illustrations are: Mr. Praveen, engaged in retail trade, reports a turnover of 1 crore 98 lakh 50,000, means it is less than 2 crore. For the financial year 21-22, his income from the said business as per the books of accounts is 13.2 lakhs. What is the PGBP? 13.2 lakhs. Retail trade is only the source of income from Praveen. Assessment year 21-22 was the first year for which he declared his business income in accordance with the provisions of presumptive taxation 44 AD. See, already in the assessment year 21-22, he declared as presumptive taxation. Here it is financial year 21-22, means assessment year 22-23. Okay. Is Praveen also eligible to opt for presumptive determination of his income chargeable to tax for assessment year 22-23? Yes, he is eligible because he has an income less than 2 crores. If so, determine his income from retail trade as per the applicable presumptive provision, assuming that whole of the turnover represents the cash receipts. See, if no cash receipts, then we can pay 6%. But if it is cash receipts involved, then we have to pay 8%. 1 crore 98 lakh 50,000 into 8%. 15 lakh 88,000. They have to pay this, and they have to show this as an income. In case Mr. Praveen does not offer presumptive taxation of income from retail trade, what are his obligations under this income tax? What is the obligation? He need to maintain the books of accounts. And get it audited. Because his income exceeds 1 crore. 1 crore is the turnover limit. No, to get audited, we have studied now only. Okay. But another obligation, another flaw for him is he cannot offer presumptive taxation for 5 years. It is from 20. See, this year anyway they are not opting. From 23, 24, 24, 25, 25, 26, 26, 27, 27, 28. All these 5 years they cannot offer presumptive taxation. Every year he need to maintain the books of accounts. Okay. What is the due date for filing the return of income under both the options? See, if at all he is filing return of income on presumptive basis, then 31st July will be the due date for filing the return of income. But if at all he is not following and he want to get audited, then 31st October will be the due date for return of filing the income. Okay, next 19th question. See, learn, observe keenly, have a good clarity on this. Okay, Mr. X commenced the business of operating the good vehicles on 1/4/21. He purchased the following vehicles during the previous year 21-22. Compute his income under section 44 AE. See, first write the formula. For heavy good vehicle, it is 1000 into, see, heavy good vehicle weight of vehicle in tons into number of months per vehicle. And for other vehicles, it is 7,500 into number of months per vehicle. Here the weight is not there. Okay, that much. What is a heavy good vehicle? Vehicle more than uh, 12 tons. What in case of kgs? 12,000 kgs means only 5 and 6 are heavy good vehicle. For them we need to calculate like this 1000 into like that. Other 7,500 into number. How number means here number of vehicles. Number of vehicles per month we should calculate. So number of months they have used, we have to calculate first. This is first vehicle is started in, see this is irrelevant for us because it is not heavy good vehicle, irrelevant. Date of purchase is 4th of April 10th, means for 12 months they have used this vehicle. This is March, only for 1 month they have used this vehicle. And here it is 16/7 for from when it is 4, 5, 6, 3 months they have not used, means 9 months they have used. And from April, January means 3 months they have used this. We will write for this also. August, September, October, November, December, January, February, March, 8 months. 23 to February, March, 2 months. So multiply all this because here they have said number of months per vehicle, means number of months into number of vehicles. 12 2s are 24, 1 9 3s are 27, 3 1s are 3. This we will do it later. Okay, all this into 7,500. Simply add that and multiply with 7,500 instead of for 24 doing for every vehicle. 24 plus 1 plus 27 plus 3, 55 into 7,500, 4,12,500. See for others, 8 into 12, 16, 2 into 1, 2, means 18 number of months per vehicle. So how we need to calculate this? 1000 into 18 into weight. 15 tons is there here. 15. See if it is, see 15 for both it is 15. For one it is 14 and one it is 15. We have to calculate separately. 15 if it is 14, 14 into 16 into 1000. 15 into 2 into 1000. Since it is 2, it is 15 for both of them. We are making the sum of both number of months per vehicle and multiplying directly. So 1000 into 18 into 15, 2,70,000. Add that 4,12,500 plus 2,70,000, 6,82,500. This is the final answer. Okay. Would your answer change if two good vehicles purchased in April were put to use only in July? I already said if vehicle is there, we have to calculate presumptive taxation on them. There is no need to check whether it is put to use or not. Next question. Alpha Cooperative Bank amalgamated with Beta Cooperative Bank on 1/12/21, December 1st. The depreciation for the year ended 31st March 22 calculated as per income tax rules allowed to Alpha Cooperative Bank has amalgamated not taken place amounts to 2.4 lakhs. See, had amalgamation had not taken place, if there is no amalgamation, depreciation calculated as per income tax allowed to Alpha Cooperative Bank is 2,40,000. Means if there is no depreciation for cooperative banks, it is 2.4 lakhs. But now they have amalgamated with beta. Compute the deduction of account of depreciation allowed in the hands of Alpha Cooperative Bank and Beta Cooperative Bank. I already said if there is an amalgamation or any change in the constitution, we have to calculate depreciation directly first. Means they have already given 2.4 lakhs. We should directly bifurcate between the number of days ratio. So since it is 1st of December, 31 days of December, 31 days of March, 28 days of February, 31 days of March. 121 days they have used it for Beta Cooperative Bank. Among how many days? 365 days. Means 244 days here, 121 days here. So 2,40,000 divided by 365 into 244. 1,60,438. 2,40,000 divided by 365 into 121. 79,562. Okay. And the next question, last question here. Miss Vivita, a resident and ordinarily resident in India, has derived the following income from various operations relating to plantations and estates owned by her during the year ended 31/3/22. This is the question relating to agriculture income and business income. We have to compute both of them. So for income from sale of a centrifuge latex processor from rubber plants grown in Darjeeling, 3 lakhs. We have to calculate business income, agriculture income. Majority agriculture income, major share will be the agriculture income. For rubber, what will be the share? 35% will be the business income, 65% will be agriculture income. Means 3 lakh into 35%, 1,05,000. 1,95,000 will be the agriculture income. For coffee grown uncrewed, it is 25% is to 75%. Means 1 lakh, 1 lakh into 25% is 25,000, 75,000. Income from coffee grown, crude, roasted, grounded in Colombo. See, Colombo is not in India, no. So total it is 2,50,000 is business income. Sale of tea grown and manufactured in Simla. So for tea it is 40 is to 60. So 4 lakhs into 40%, 1.6 lakhs, 2.4 lakhs. Income from sapling seedling grown in nursery at Cochin. Basic operations were not carried out land. Even though it is not carried out of land, it is in India, it is an agricultural income. So entirely it is agricultural income. No need to bifurcate. So what is the total of agriculture income? $5,90,000. 5,40,000. Okay, With this, we have done with illustrations. There are 11 more test your knowledge questions in this chapter.